Hi, this is Zach Meir with the Bulletin Board Heroes here at Box Markets for Tuesday, the 27th of September. Starting off with the FTSE 100, where we are right at the bottom of that falling March trend channel, so 69.70 the notional support, though, but a bit of an overshoot, as we normally do with these things. 69.37, yesterday's intraday low. Slight alarm there at the way that 70.80 or 70.75 seems to be two-day resistance for this market, and that's still well below the 71.30 old support that we had at the beginning of the month. So while we're below 70.80, looking for potentially a fresh attempt at downside, just how far that could be if we have an end-of-day close below 69.70 is shown by the wider floor of the March falling trend channel there at as low as 66.65. So that's the nightmare scenario, maybe by the end of next month, if all does not go well. RSI near the oversold area, but not quite on that oversold area. As we've noted before, RSIs at or below 30 tend to be buy points for the UK index, but looks as though we're not quite there yet. So really chasing for 70.80 plus or 69.70 and below in terms of ditermining the next major move for the UK index. Going on to Bitcoin, which has been as dull as dishwater of late, but just looks like it's getting a little bit better here with this test of that November resistance line. That's around 20,600. That's also the level of the 50-day moving average. So a decent end of day or weekly close above that could give us an unexpected move towards the 25,000 zone and get this market out of the risk of making a new leg below 19,000 support from back in July. The other point to note, I suppose, is the way that we've had lower lows for the latter part of September, but higher RSI trace. So a bit of bullish divergence coming in there, and that explains why we've had the move higher today. Still need to get through that 21,000 area definitively, which would break the 50-day line to really give us any confidence that 25,000 is on its way, which is basically early August resistance. End of day close back below 19,000, then once again a risk if we fail on this market. Going on to the pound, which I think the hysteria seems to have died off from over the weekend. Here you can see that basically we've got back to, we're sort of trading around the Friday lows, so that was around 108.39. and trading either side of that. So at the moment you still say that old support has become new resistance, and while that is the case, some traders may be tempted to go short towards 110, looking for a partial or even full retest of the 103.48 low that we had at the beginning of yesterday. RSI starting to improve a bit. It was down in the mid-teens, is now towards the 20 area. So on that basis, one would say that this market is or has been very oversold, and we are due at least a little bit of a rebound, even if it's early towards the 110, 111 area, which was the floor of that falling February trend channel. Looking at the whole picture, though still very much in emergency mode, 103 or 104 was the potential low for this market on the basis of that 2017 support line. But basically, if we go back down below 103.5, there is the risk of a full move down towards the floor of that falling 2014 channel as low as 96 cents. But for the time being, the worst of this looks to be over, although we want to see consolidation above 110 really to confirm that over the near term, maybe over the next week or so. Moving on to the stocks, first up is Bidstack, which remains an area of battle between the bulls and the bears. Bit of a bear trap situation, or at least a retest of August support there towards 2 3/4 pence. We need to get an end of day close back above 2 3/4 to give us the chance of another test of not only the 200-day line at 3 1/4, but up to early September resistance at 4 pence. But very disappointing that we've come back so quickly from that bull trap through 3.5 from earlier this month. So that is perhaps telling us something about the state of the stock. On to Boku, which looks like the fundamentals are continuing to improve. We had a trend line break there from November on the Amazon news. You would have thought there'd be actually more of a break than there has been, but above 94, still looking for £1.20, perhaps as soon as the end of next month on Boku and or Boku rather, and the unfilled gap to the upside, bear trap gap reversal, should stand us in good stead for a move towards that £1.20 area. On to Chaarat Gold, where the burgeoning rally petered out to start this week, but we still have some support there above the broken April resistance line and on the 50-day moving average, 12 pence above that. We could head back up to the mid-teens or maybe even up to the top of that falling trend channel from this time last year, as high as 16 pence is the best case scenario. So above 11 or above 12 really, looking for 16 on Chaarat. Moving along to a stock which hasn't been living up to its name of late, but there's always fundamental hope that things are turning around. It does actually look as though we've got a bit of a turnaround here for Sizzle. So that saucer-shaped reversal on a rising 50-day moving average at 1.6 pence above that, looking for the 200-day moving average at 2.1 pence over the next 2 to 4 weeks as a best case scenario. We do have something of an uptrend there in the RSI window as well, so maybe that will help turn this situation around. But at least above 1.5, looking better for Sizzle at the moment. Onto a stock which obviously is keeping an eye out on, or an eye on the Russia-Ukraine situation. We've had an improving tone here at Eurasia for the last couple of weeks, breaking above the 50-day moving average and generally staying above the 50-day line since the middle of this month, 10th, 11th of September. Want to see an end-of-day close back above the 50-day line, currently at 5.6 pence. If we can get that, then we may be due another retest of the main resistance here between 8 and 9 pence over the next couple of weeks. So still that trend line break in force, and testing that broken trend line and then heading up is a relatively positive thing to do. Next is Engage XR, which also looks like it's bottoming out. Unfilled gap to the upside after a bear trap below June support there earlier, well, back in August. 9.5 pence the old support, and above that looking for up to 14 pence at that November resistance line projection, hopefully as soon as the end of next month or even sooner. Requested stock is next, and maybe it's a good time for this to be requested. Here we've got ITM Power, which has obviously taken a bit of a slap over the last month or so, 2 unfilled gaps to the downside, which is normally not a good thing to happen. It suggests a bit of a fundamental change of opinion by the market, but even though we've had lower lows for ITM so far this month or in the last few sessions, the RSI has actually been trading higher, so a bit of bullish divergence there could allow the shares to either just test the floor of the gap down at £1.34, or as a best case scenario over the next month or so, head up to the top of the gap there at, or the second gap there at £1.52, but £1.34 possible while we hold above yesterday's close around 109. So that's probably the most you'd want to risk at this time. Ncondezi is the next contender, and here you can see we've got a rising trend channel in place since November, top of the channel there at 1 3/4 pence. Rising 50-day line, support above the 200-day moving average at 0.83, and the longer we stay above the initial September peak at 0.98, the greater the chance of 1.8 or so by the end of next month. Another requested stock coming in the form of Sound Energy, which looks as though it's just ready to break that May resistance line there at 1.35. Probably safer to wait for the 50-day line at 1.4 to break before assuming that the 200-day moving average of 1.85 could be seen over the following 4 to 6 weeks. But bear trap there from below the 1 1/4 pence July support, and above that we've got a slightly better picture there for Sound at the moment. Tertiary is next, and here we've been looking for, or were looking for, a rather ambitious looking retest of May resistance towards 0.3. Until today, it looked as though the best we were going to do is 0.22, and that's still maybe the case, but this V-shaped bull flag after that unfilled gap to the upside and the rising 50-day line suggests that the bulls are back in business, and we should see an end-of-day close, or sorry, a target or end of October close for the shares as high as 0.3. especially while we hold above the 200-day moving average at 0.17. So let's see if the unfilled gap to the upside, the bear trap gap reversal, does its trick on tertiary. On to one of the more followed stocks of recent times. We've got Union Jack. Disappointing that we've topped out around 52, 53 pence earlier in the month, but looks as though we've got the shares back above the 50-day line at 30 pence, and the longer they do that, the greater the chance of a partial or even full retest of this month's resistance. Initial target here while we're above 30, up to resistance on the way down at 41 pence over the next couple of weeks. Finishing off with a stock which has been something of a problem child in terms of reacting to the fundamentals. Here we see UOG, or United Oil and Gas, bounce off the floor of that broadening triangle. We've got a bit of bullish divergence there, or at least an uptrend line in the RSI window, which is a year old. So that might at least propel the shares back towards the 50-day moving average area at 1 3/4 pence, even if they fall away after that. That's it for me today. More updates tomorrow.